Hey there, and welcome back. Today we're going to discuss FHA loans in more detail. That is, why you may want to get an FHA loan and why you may not. FHA mortgages are usually associated with first-time home buyers, but it's not a first-time home buyer program. That is, anyone buying property can use FHA financing. So today we're going to talk about the pros and the cons of using FHA financing. So let's get to it. The first pro is an FHA loan allows for a minimal down payment. That is, you only need to put down 3.5%. So if you do the math, buying a $100,000 property, that's a $3,500 down payment, and a $200,000 property has a $7,000 down payment. And a $300,000 property would be $10,500 down payment. When you compare these down payments to a conventional mortgage of putting down, say, 5%, 10%, or even as high as 20%, as you can see, an FHA loan costs a lot less than a conventional mortgage. The second pro is they're a little more lenient on the credit guidelines, and that means you can have a lower credit score with FHA and still qualify for a good interest rate. Whereas conventional loans, the lower your credit rating, the higher you get hit with regards to mortgage fees and interest rates. You can have a credit score as low as 580 for an FHA mortgage. And for a conventional 5% down payment, the lowest credit score is 680, 100 points higher. The next pro is leniency with regards to your debt to income ratio, also called DTI. What is the debt to income ratio? It is the amount of money that you bring home per month versus what your monthly debts are. That's what your debt to income ratio is. So with conventional financing, they don't want to see you spend more than about 43 to 44% of your monthly income towards debt. And that includes housing payment, taxes, insurance, car payment, credit cards, and student loans. Whereas FHA, you can be as high as 56 or 57%. In some cases, you can get approved to use more of your income towards debt than, say, conventional loans, which means that in theory, you're likely able to qualify for more homes using FHA financing as compared to conventional financing because of the higher debt to income ratio. The last thing that is a pro with regards to FHA is a private mortgage insurance, also known as PMI. So when you buy a property and you put down less than 20%, you have to pay mortgage insurance. FHA is typically lower than PMI with conventional financing, and that's why in some cases, if you're putting 3.5% down, or if you're going conventional and you put 5% or even 10% down, you may be in a better position to use FHA financing, even though you can qualify for conventional financing, because the mortgage insurance is going to be a lot less per month if using FHA than conventional. And you could end up with a lower monthly payment by going FHA versus the conventional financing route. Now let's talk about the cons of FHA loans. The first one is going to be to pay mortgage insurance on your loan forever. You're never going to be able to get rid of that PMI unless you sell the property or refinance out of that FHA loan into a conventional loan. Whereas if you're going with conventional financing, once you have 20% equity in that property, you can refinance out of that mortgage into another conventional mortgage. The point would be to remove PMI. But these days, people don't have one loan forever. Typically, people refinance every couple to few years, or sell a house and buy another. So the chances of you having that same loan forever are very slim. So the downside of having PMI forever may not necessarily be a con, because you may not have that loan forever. Another FHA con is if you're interested in purchasing a condo, it has to be FHA approved for FHA to refinance it. What does that mean to you? It means that not every single condo complex out there is FHA approved. And the condo association would have to go through a process by providing documentation and financials as a community to meet FHA guidelines. The reality is that most condo complexes out there don't want to go through that process because it requires a lot of paperwork and requires upfront fees. The third thing when using FHA financing that's a negative is that it can only be used for an owner-occupied purchase. You can't use it for a second home, and you can't use it for an investment property. It has to be your primary residence when using FHA financing, as opposed to conventional financing, where you can use that loan for a second home or even an investment property. The last thing that would be a con for FHA financing is loan limits. There are restrictions based on different areas of the country with regards to how high you can go with regards to FHA financing. That would be a negative, especially if you're in a place where the loan limits are lower than the value of the property that you want to purchase. So there you have it. If you are in a process of trying to buy a home property and you need to speak to a mortgage professional and you don't have one, reach out to me. I'll be happy to put you in touch with somebody that can go over FHA loans and can guide you and discuss that process in more detail and help you qualify if you're looking to get approved for FHA. If you're looking to buy a property and you don't have a real estate agent and you're in southeastern Michigan, please reach out to me. I would love the opportunity to help. And if you're in another area, I can also help you get in touch with a real estate agent that does business as I do. Thanks for taking the time to watch this.